TikTok. Okay, this is a crazy story, and I know you covered it because I saw your coverage on the news. TikTok is going to move its headquarters to Silicon Valley.
So I don't think they're going to, I mean, they'd like you to think they're moving their headquarters to Silicon Valley, but because of the...
Hi, everybody, and welcome to the September 16th installment of the Silicon Insider, the only uncensored look at life and business in the Valley. My name is Mike Malone, and I'm here with special contributor Scott Budman, technology reporter for NBC News. Our producer is Jordan Henderson. Our East Coast correspondent is Bob Grove, and his host, as always, is the Silicon Valley Business Journal. Okay, well, we've got to start with the stock market. You know, we've been talking for 6 months, worrying about whether this is going to be an inflation-driven recession or somehow we were going to negotiate our way through it, maybe take an economic downturn. It looks like the stock market reacted this week to the latest inflation news and said, we're in the deep end now. We're not going to get out of this easy. This is not going to be a soft landing. This is not going to be shallow. I mean, one day this week, the market lost 1,200 points. And the tech giants, I believe, lost over $1 trillion over the course of 3 days. That's a lot of lost capital. And Apple lost 200 billion on Wednesday. Apple.
Well, the bigger they come, the harder they fall. And you could say that not only about individual tech companies, but about the market in general. You know, they're reacting to inflation. Prices have stayed high. Overall inflation has stayed high, even as gas prices have come down. And that's bad news. You know, inflation is rough on not only people who have a lot of money to put into the market, but let's face it, you know, it hits those who need to put food on the table even harder when that food costs from 13 to 15 to 20 to 25% more year over year. And I think what the market was reacting to is the idea that, okay, if inflation is still hot and heavy after a couple of pretty big interest rate hikes, we're likely to see several more. And the market doesn't like high interest rates because it makes it, you know, harder to borrow. We've already seen housing here in the Bay Area, in Silicon Valley, all but disappear from the market as mortgage rates have gone back above 6%. And so we're really reacting to not just inflation fears, but I think recession fears, because inflation is here and it's here to stay, at least for a little while.
Yeah, I read one estimate the average American has to spend $400 a month now for food. I think it's food and gas. That's a pretty devastating number. Maybe not in Silicon Valley, but if you go out to the Midwest where salaries are, you know, half of what they are here, that's a hell of a hit to take on every month. I mean, luckily, the railroad strike has at least been postponed, because if that were to hit, you know, if the contract negotiations had fallen through, I think the entire administration was sitting at the table with the unions, because they don't want that to happen, you know, a couple months before an election. That would be devastating, because if we had a railroad strike, everything stops, including American agriculture. Luckily, we missed that bullet. We dodged it, but things don't look good going into the holidays.
No, it'll be interesting to see with all these new products that Apple came out with and all this optimism about, hey, are people going to shop because the job numbers remain strong, but prices are still high. And I think that's sort of the back and forth. People are saying, okay, well, I'm working and that's fortunate, but things have not only cost more over the last few months, but even over the last couple of years. And I think that's weighing on people. And if you look forward and say, okay, the markets are down, there's all this, you know, there's this feeling that we're going to see interest rates go even higher over the next, you know, 6 to 9 to 12 months. People might be dialing back their spending, both on, let's say, the individual shopping level, but also it'll be interesting to see on, say, the VC investment level.
Well, there's no IPOs going on right now, that's for sure. You know, we were cheering Apple last week because they kept prices steady. I mean, they seem to be doing all the right things, but they still got hammered. I mean, does that mean the iPhone's current price is still too high?
No, I don't think the stock movement had anything to do with the iPhone release. I think, if anything, that's a cause for optimism. Hey, look at Apple. They're not only updating the iPhone, they're giving people what they want with the watch, and they're letting people go wireless even more, and all these things that are very consumer oriented. But when you're a consumer oriented company, you're going to get hit the hardest on the one day when everyone's bailing out of the markets because of inflationary concerns. And so Apple says, hey, we get it. Inflation is here. We're not going to raise the price of our phones. But they're still $7, $8, $9, $1,100 phones. And if people are saying, hey, maybe this Christmas is the time that we skip, that's going to hurt Apple's bottom line. So it's
Like you,
it's
just
optimistic, but there's
buy last year's model, which is what you always do, right?
right. Right. There's always last year's model. And I assume those will sell pretty well too, because people love their phones. We've seen that even in times of economic hardship, everyone walks around with a smartphone. So I don't expect that to change. But will they jump into the brand new products, or will they wait because there's so much economic uncertainty going forward? And we haven't even seen wide scale layoffs, but we have seen some, and it's enough to scare people.
Uh, I found it interesting. Tech took a harder hit than anybody else, it looks like. I was reading that Campbell Soup, General Mills, and Smuckers did better in the market this week than all of high tech.
Well, that makes sense. Those are your staples in an economy where, what are you going to give up? Are you going to give up your, Ring doorbell or your new $1,100 smartphone? Or are you going to give up food? Come on. I mean,
Yeah, and
this
we're
is
going
a
to be
choice
all of us are going to
we need to
be a lot
understand.
of Campbell's tomato soup for the next 6 months. I have a feeling.
Right, right.
Okay, we had some layoffs. Twilio just devastated its ranks. What's that all about?
I mean, I think that's a software play giving up some of its recent gains. Look at the company's stock price. This was one of those companies that, whoa, during the pandemic, people need our software. We're selling like crazy. Our stock price is going up. And now they're going back down and they're laying some people off. It's interesting. We saw a deal this morning, Adobe buying Figma for $20 billion. That's a
$20 billion.
huge software move.
And
Yeah, and that shows
now
there's
you
still
think that
some
was
optimism.
they wanted to get that company, or they wanted to stay in good graces with Microsoft?
I mean, I think they want to get that company.
Microsoft loves that company.
Right. But they directly compete with Adobe. So they also are able to take out a competitor and flex a little muscle. Adobe has a lot of cash. And so they're able to use some of that to consolidate, which is how a lot of the smaller software companies are going to survive during this, seemingly post-pandemic slowdown, or they're going to have to do what we saw both Twilio and Realtor.com do earlier in the week, which is to lay people off.
Everybody ignores Adobe. It's sort of that nice company on the corner that just happens to be gigantic and owns, what, 90% of the market. No one is going to bring up antitrust about this acquisition. First of all, no one's noticing right now, but I think even if it was good times, everybody goes, well, it's Adobe, it's nice. They do pictures, they've been around forever. I think they actually have the protection of being boring.
And they have the protection of not being Microsoft. And yeah, they don't have a flashy CEO. They normally don't make huge dollar deals. They don't end up in court. They just grow. They hire. They are such an economic engine for San Jose and the Silicon Valley. It's interesting because you always look towards Cisco and some of the others. But Adobe, you're right. It's sort of the unsung hero of Silicon Valley. And they've stayed strong throughout the turmoil. I mean, this is just what they do. They chug along all the time.
They stick to their knitting. They come out with solid products. There's never a hint of scandal. I mean, if you met John Warnock, he's never going to be in a scandal. So, it's sort of like the perfect unknown company.
And, you mentioned relationships. They have a really tight bond with Apple, the world's biggest company. And that's not a bad place to be.
Saved Apple. Let's call it straight. Macintosh was not taking off when it got introduced until Adobe came along and created, changed the printing industry forever. So, I mean, Apple owes a lot to Adobe. I think Microsoft owes a lot to Adobe. You know, they're doing their job right. I mean, nobody's studying them in business school, but I think they're the ones that should be looked at, as opposed to some of these flashier, you know, streaking comic companies that kill themselves.
I agree. They'd make a great case study on how to do it for decades and do it successfully.
Okay, shareholders of Twitter voted Tuesday to accept Elon's deal of $44 billion. Wouldn't you have thought that happened a while back? I think everyone assumes that happened a while back, but it's just when it's kind of a moot point.
Right. Well, I think it's a moot point because at this point, it's a numbers game. You know, you're talking about a $12 billion gap between the current Twitter stock price and what Musk has signed a contract and agreed to pay. So I think the shareholders, the only thing that is interesting about this really in terms of the whole ongoing Musk Twitter soap opera is that those shareholders include a lot of employees that probably want Elon Musk just flat out of the picture. So how do you square that with the fact that you really have a lot of money to gain here if he does buy the company at $54.20 a share, you know, for $44 billion? And if he does go away, by the way, I think Twitter's stock price drops quite a bit.
Oh, considerably. Yes.
So there's a lot of money on the line when you're going into a time where, you know, it'd be nice to be able to wither inflation and make your mortgage and all that stuff.
Oh, I think the Twitter employees would be very anxious to have that deal right now, especially looking ahead, especially with that whistleblower, what's his name, Peter Zadko,
Right.
giving testimony in front of Congress. I read a list of his 5 biggest claims. They're pretty ugly. He said one of them is that Twitter data is not secure. The company routinely lets thousands of employees, roughly half its workforce, work directly on the live product, and even use user data. Okay, that one's just kind of ugly, but let's go on. This is the big one. Twitter could easily calculate a better metric to estimate spam accounts, but chooses not to do so. Now that seems to me the heart of the entire matter. If they can, if Elon's lawyers can show that Twitter is purposely not using the right metrics or even applying metrics to find out its current situation. I mean, isn't that prima facie evidence that they're not being truthful about their numbers?
I mean, shouldn't he have known that with those lawyers when they went in? I don't know. Right. If they can prove that Twitter somehow lied to Musk and his lawyers, they'd have something. But to say Twitter is loose, you know, fast and loose with security and with some of its, you know, MAUs, I mean, come on, that just means it's a social network at this point.
Phone is ringing, but okay, next one. Some or all of Twitter's services could be forced online, perhaps forever, because of cybersecurity issues. That's interesting. So, I mean, he's really suggesting they are vulnerable and insecure because they're not doing the security work. And finally, this is another big one. Twitter is vulnerable to foreign exploitation and may even now have foreign spies on its payroll, notably from China and India. Is that correct?
I mean, he's saying they're foreign spies. I don't know that we've proven that at this point. But
there's
a lot of these things are serious issues, but you could also say these are the same serious issues that Facebook has, that TikTok has, that YouTube has.
I think you can apply this to every social networking company when you get right down to it.
Right. And that's why
they've all been very happy to have these gigantic numbers of users, and they're not going to look too close.
Right. And therefore, I don't know if Musk has a case to say this is something different than what I should have known back, you know, late last year or whenever he started to.
It's still a matter of due diligence that he didn't do.
Right. Right. Okay.
And finally, but if Twitter was intentionally hiding that data from him, that changes the nature of the case. Finally, this is a big one. The whistleblower claims that Twitter is violating many of its commitments to the FTC that it made, you know, a couple of years ago, 2011, I guess it was, that they're actually cheating the government on this. They're violating their commitments and agreements. If that's the case, does the FTC come rolling in now?
Maybe, and that could put a stop to it. If you're knowingly breaking the law,
Yeah.
maybe a potential suitor can say, hey, I didn't know they were knowingly breaking the law. I just
Yeah.
wonder how much this is real material stuff and can get in the way of the deal to buy a company that's clearly functioning fine. I mean, Twitter has got its issues. And I understand those issues and why investors aren't so thrilled with the company and why some security people are saying it's risky. But come on, it's a social network. Musk knows what he's getting into. He knew what he was getting into. At this point, it sounds a little bit desperate.
Well, let's go even further. We've both been investigative reporters. You always, when you get a whistleblower who's ready to talk, one of the first things you ask is, what axe do they have to grind? Because nobody blows a whistle, out of just altruism. They're always pissed off about something. They got fired, they got a bad performance review, whatever. And you have to cut through that to see what's true and what's not.
Right.
And yeah.
I mean, in this case, you have a former employee who, for some reason, has been quiet until Elon Musk wanted out of a deal to buy his former employer.
Yeah, funny about that.
Right.
Okay. We were talking about layoffs and changes. Amazon, have you seen the list of warehouses that Amazon is closing? A lot of them are in California too. I mean, San Leandro, they're a backyard. I noticed they didn't do Tracy, but all around us, and also Southern California, that's a lot of warehouses. And Amazon says, "Oh, we're just fixing overexpansion due to the COVID lockdown." You believe that? I'm not sure I do. It strikes me that it's a pretty good excuse to start really reining in preparation for hard economic times. It's a nice cover.
I think one and the other are actually very similar. So I agree with you, but I think really saying that, hey, we built all this stuff up during the pandemic because everybody was shopping online, and to say times are slowing down, I think part of the reason times are slowing down for a online company and a software company and all the things that Amazon does, I think are sort of legitimate, because I think they will see a slowdown. I mean, look around you.
I have no doubt they will.
Right. People are once again going not only to restaurants, but to grocery stores. They're going to movie theaters. That hits Amazon's streaming service. I mean, Amazon is just one of those companies. I mean, look at Bezos's wealth during the pandemic, how much it went up, and look at the stock price as we've come out of it. I mean, Amazon is what a lot of these smaller companies are, but on a gargantuan level, because they're so big. No one's saying Amazon is going to go away, like, say, a Peloton or something is threatened. But again, look at the market. It's telling you that Amazon isn't as important, quite as necessary as it was during the pandemic. It's still there. It's still going to make in billions of dollars a quarter. But I think people are saying, we can loosen those chains a little bit and get out, and which I believe is healthy for the overall economy. But Amazon has to adjust. It's just that gigantic. So yeah, there's a slowdown, but I think it's largely because of the speed that it grew during the pandemic.
But I think there's one other factor missing, which is headlines. This is a good PR play. We're tightening up after we grew so much, helping America during the hard times of the pandemic. It's not the headline that says Amazon lays off 15,000 employees and closes 36 warehouses. That's bad publicity. That drives the stock down. This looks like, oh, they're responsible, fiscally responsible to their shareholders, and they're making the company lean and mean. I think the PR department had a big role in this one.
I mean, Amazon is famous for cutting people, and a lot of them are contractors, those warehouse workers. So I'll believe the Amazon is trimming the sales story when I see it at like the executive level or the full-time employee level. But so far, Amazon has been nothing but a growth story, partially because they've been able to shave off that lower layer and just, let's face it, I mean, abuse their workers like crazy.
Well,
I mean,
the good story in all this is there's thousands of Amazon employees that won't have to pee into Coke bottles on the job in the near future.
Right. But look, Amazon has got to deal with the fact that the perception is it's just not as necessary. Its stock is down an entire third from its high, less than a year ago. And that's because people are, voting with their wallets, but also their shoes. They're saying, I don't have to do everything from home anymore. And that is going to hit Amazon to a large level, as we've seen with other software and online companies.
So is this a good news for Walmart? I mean, people still got to buy the necessities, the staples. And
Yeah.
Walmart's doing a pretty good job of delivering and online ordering and all that. Everyone thought that they were in big trouble, but
Right. But Walmart, which by the way is turning into an online giant on its own right. But go to a Walmart, go to a Safeway. These stores are packed again. Even the smaller. I mean, speaking of Amazon, Whole Foods, these places where you go are full of people again. It surprises me, honestly, that they're not wearing masks for the most part, but that's a different issue. But people are getting out and doing their shopping, entertaining, eating, dining, etc. outside, which I think is healthy for the overall economy. I do like to see it. But, and I'm not going to fret over Amazon's stock price, but Amazon is one of those companies just on a very much larger level than a lot of the ones we talked about. Netflix is another one, and that has just gotten keel hauled market value wise, but it's still around and still doing fine. But the idea that it's making adjustments now, I think, is necessary, because we're seeing both post-pandemic fallout for these software companies, but also, as you said at the top of your show, inflation, rising interest rates, consumer concerns going forward.
Falling confidence, yeah, in a big way. All right, now let's talk about the bête noire of the social world. TikTok. Okay, this is a crazy story, and I know you covered it because I saw your coverage on the news. TikTok is going to move its headquarters to Silicon Valley.
So I don't think they're going to. I mean, they'd like you to think they're moving their headquarters to Silicon Valley, but because of the concern that ByteDance, their parent company, is a Chinese company, they were also on Capitol Hill insisting they don't have a headquarters. We don't have a headquarters.
We don't have headquarters, and we're going to continue sending all that user data to China.
They really don't want you to think that.
They admitted it.
They want you to think they're just global and all over the place, and they just exist to make people happy with their dances.
We're a virtual company. We don't need a headquarters.
Right. So this has neither here nor there with the data. But they are making a big move to Silicon Valley. Now, as far as their data, they want people to think that Oracle is handling a lot of this. I mean, in other words, TikTok is a money-making machine. They're huge ad revenue generators. They're huge data generators. They're now one of the biggest search engines for young people. I mean, they are just killing it.
Young people, bigger than Google.
Right. But if they want to monetize this for investors, let's say, and go public, they need to shake the perception that they're a Chinese company sucking your data into the Chinese government. And part of that, I think, is to make a move, a deal with Oracle. They've got now 2 big buildings right across from San Jose Airport that they're subleasing to move into. Buildings, by the way, that were originally for Yahoo workers. So talk about a changing of the guard in the online world. Now it goes to TikTok. But I think we're going to see more moves like that, where they want you to think, hey, look, we are an American company doing American things, reaching out to a global audience, but we have data protection, and they have to prove that. They obviously haven't yet, but that's got to be in their future.
Well, that's why you don't move your headquarters to Omaha, because this is a Potemkin company, and they want to be able to say, well, look, we're accepted in the heartland of high tech, right there in San Jose. We're a Silicon Valley company.
Right. It's worth the high rents for them to say exactly that.
Don't go after us, federal government, America, because we're an American company. We eat dinner at Original Joe's in San Jose. We're local. Okay. Finally, this is kind of fun. John Chambers, one of the Great Valley names. There's my cat.
Hey.
Jump. You're going to see a cat leap right through the air here. How's that?
Nice form. I'm impressed.
John Chambers, one of our favorite people. He's one of my favorite people. I'm sure he is yours too, because he's always been really honest and open and sincere. When he was running Cisco, he talked about his mistakes. He was a really great interview, speaking as a reporter. And now he's going to run Nile, which is kind of a competitor to Cisco, very tiny competitor, but still. That's interesting. Are they going to be based here or somewhere else?
I don't know. I imagine they'll have at least, like everybody else at Silicon Valley headquarters. It's just interesting. I mean, it's not such a surprise that he would get into that world. I mean, he helped build up that world. And yeah, he's great at what Kim Palese famously called plumbing.
Yes.
She said plumbing can be sexy, and John Chambers helped prove that. And so, for him to get involved in that, it makes a headline because obviously this is the guy that, ran Cisco for so long. But I say good for him staying in the game, because you're right. He's not only been a good interview for us on this side, but I've seen him be a good mentor, and he certainly doesn't have to work another day. I'm sure generationally, the Chambers family doesn't have to work another day, but for him to stay in the game to mentor others is fantastic. And it gives the industry, a good future just to have him around.
Now, is he chairman or is he CEO?
No, I think he's chairman. I think there's already a CEO.
Okay, because that Southern gentleman is no longer a kid. I mean, I'm not like to get down there in the mud running a company. Interesting name, Nile. That strikes me as a 19th century company name. Not a Silicon Valley company name, Nile. But bless him. I hope he sticks around for a while and makes Valley life even better.
Yeah. Yeah.
By the way, he's the only CEO I ever interviewed. When I interviewed him for the Wall Street Journal, did a feature on him. He's the only one I've ever met who, when I finished the interview, said, "What can I do to be a better interview subject?" He was constantly trying to improve his performance as CEO. Most CEOs go, "I'm God. I know exactly what I'm doing."
No,
there was a humility about that guy.
It's true. And not only have I heard him say that, but after the just, catastrophic fall of Cisco and all the reporting we did on that, as the dust of the dot-com bust cleared, I remember at an event, he pulled me aside and said, all the stuff that you threw at us and all the bad news, he said, I got to be honest. It was accurate. It was fair. And I always appreciated that. And that meant a lot. That meant a lot.
A class act. And we need some class acts back in this town these days. Okay. That's it for now, folks. You can find us on the Silicon Valley Business Journal homepage, as well as on Spotify, Anchor, Google Podcasts, Apple Podcasts, LinkedIn, and YouTube. Have a great weekend. I will be talking to you next week, Scott, from the southern coast of Oregon.
Excellent. Enjoy.
Take care and have a great weekend, everybody. Bye-bye.